Hey everyone, welcome. So, if you're watching the markets right now, and I mean stocks, crypto, you name it, you've probably got this feeling of whiplash, right? Like you're being pulled into completely different directions at the same time. Well, that's because there are two powerful and totally contradictory stories fighting it out for control. And today, we are going to unpack both of them.
Yeah, on one side, you've got the bears, right? They're screaming recession and warning of a much deeper crash. But then on the other side, you've got the bulls, who are basically saying, hey, the worst is over, a rebound is just around the corner. So the big question is, which story is actually going to win?
All right, let's get right into it. This core conflict, this tug of war, is exactly why the market is acting so jumpy. Every little piece of news, every whisper from a central bank, it's causing these massive overreactions. The market is just totally on edge because, frankly, it has no idea which narrative to believe. So, to really get a handle on what's going on, you have to understand both sides of the coin. The bear case, that's a story all about caution, about risk, about investors basically battening down the hatches for a storm. But the bull case? That's a whole different story. It's one about resilience, where every single dip is just seen as another buying opportunity. And you know what? You can literally see this battle playing out in real time. All you have to do is follow the money. Is it running for cover into so-called defensive assets like gold and cash? Or is it chasing those big returns and riskier stuff like stocks and crypto? The crazy thing is right now, it's doing both. And that's exactly what's fueling all this wild volatility. Okay, so let's start with the pessimists, the bears. What exactly has them so worried? Well, it really all starts with the big picture, the overall health of the global economy. For the traditional markets, the bear case looks a lot like a line of dominoes just waiting to get knocked over. It all kicks off with the threat of a new trade war, which, just injects a ton of uncertainty into everything. That uncertainty then gets worse because of delayed economic data, making it super hard to see what's actually happening. And that leads directly to earnings compression, a fancy way of saying companies are struggling to make money. And all the while, you've got geopolitical stress just adding fuel to the fire. And all this talk about a trade war is bringing back a word that, I kid you not, every single investor and economist absolutely despises: stagflation. It is the absolute worst of all worlds. You get a stagnant, barely growing economy combined with rising prices. It is the perfect toxic storm for a recession. But hey, the pessimism isn't just hanging over the stock market. Nope. The crypto world has its own very specific, and I mean very painful, reason to be on edge right now.
$19 billion. Just let that number sink in for a second. That's the staggering amount of leveraged positions that got completely wiped out in a single brutal flash crash. An event like that, it doesn't just go away. It shatters confidence. It leaves the entire market feeling incredibly fragile and, frankly, terrified of taking on any new risk.
So, for the crypto bears, this is the crucial point. It's this toxic cocktail of problems. You've got the aftershock from that crash creating this lingering fear. You have market makers pulling back, which means liquidity is thinner and prices can swing even more wildly. You've got what's being called altcoin carnage, where smaller projects are just getting absolutely hammered. And on top of all that, you have the constant threat of regulatory crackdowns looming overhead. It's not a pretty picture. Okay, but here's the thing. For every bear out there, there's a bull who's looking at the exact same data and telling a completely different story. So let's flip the script and look at the case for optimism. The bulls, they're arguing that a soft landing for the economy, where inflation cools down without triggering a full-blown recession, is still totally on the table. They're looking at the AI revolution and thinking it could drive this unexpected wave of productivity and profits. And they're pointing to central banks over in Europe and Asia that are quietly, almost secretly, pumping liquidity into the system, which could end up lifting all boats. All right, but hold on. What about that devastating $19 billion crypto liquidation? I mean, how can anyone possibly be optimistic after something like that? Well, this is where it gets really interesting, because the bulls, they completely reframed that exact same event. And this right here just perfectly illustrates their point. They don't see that flash crash as a disaster at all. They see it as a healthy reset, a cleansing event, if you will. It was necessary to flush out all the over-leveraged gamblers and the weak hands, creating a much, much stronger foundation for the next rally to build on. Look, for the crypto bulls, the fundamental long-term story hasn't changed one bit. They see the demand from big institutions for things like Bitcoin ETFs just continuing to accelerate. They see real, tangible innovation happening on-chain with new tech. And in a world that feels increasingly unstable with trade wars and geopolitical drama, they believe Bitcoin's role as digital gold only gets stronger and more attractive.
So there you have it. These two powerful, competing stories are clashing head to head. Where do we go from here? Well, the outcome is probably going to be decided on a few key battlegrounds that you absolutely need to be watching.
Think of this as your cheat sheet for what comes next. On the bearish side, you want to watch for any more tariff escalations, disappointing company earnings reports, and any aggressive moves from regulators. And here's a key one for crypto. Keep an eye on rising Bitcoin dominance. When that number creeps up, it can actually be a sign of fear because it means money is fleeing smaller, riskier cryptos and running to the perceived safety of Bitcoin. Now, on the bullish side, look for any signs that central banks are easing up, watch for strong, steady inflows into those new ETFs, and look for real on-chain innovation. That's just a sign that more people are actually using this technology for stuff beyond just speculation.
So we've laid out the evidence for both sides. The market is kind of like the jury here. The bears are telling this story of fear and fragility. The bulls are telling a story of resilience and massive opportunity. And in an environment this uncertain, the key is really understanding both of these powerful narratives. The stage is set, and the only question left is, which story is going to be the one that's right?